So today in this video, I'm going to talk about the career path in financial risk modeling. So those of you who are interested in making a career in financial risk modeling, you'll find this video quite useful. I'm going to share the different career paths in different areas of financial risk modeling. But most importantly, I'm going to talk about the career paths in banks, insurance firms, fintechs, consulting firms, boutique consulting firms, and so on, asset management firms, trading firms, and so on. Now, risk modeling has various subfields, right? You have credit risk modeling, asset liability, LM risk modeling, which includes liquidity risk modeling, interest rate risk modeling, market risk modeling, operational risk modeling, climate risk modeling. So the quants who work in risk management, they're known as the risk modelers, and there are various areas of risk modeling. This is not the exhaustive list, by the way. There are even more. For example, you can also have a team working on country risk model development, uh, right? So, but it's the work predominantly involves quantitative work on various areas of risk management, right? At big banks and insurance firms, right? Big banks like, let's say, Citibank or JPMC or HSBC, that sort of firms, right? You start as a junior analyst, and then you become an analyst or senior analyst in about, let's say, 3 to 5 years time. You become a senior analyst and you become a lead in about 5 to 8 year time. You become a lead. It can take even longer, by the way. And then you become a manager anywhere between 8 to 15 years time. Some never become manager. They actually become just a senior analyst or a lead analyst, and they saturate there. They simply don't want to move up to become a manager, or they simply do not want to become a leader, become a manager, become a head of a department. They're simply happy with being a specialist, or they're simply not good enough, or they're not getting a chance. And as you progress, there will be more and more competition, right? So it's not always easy to move from a junior analyst to become a manager in about 8 to 15 years time. Some people will not be able to make it to the manager or director level ever. That's quite a possibility, but I think it's quite possible. Even if you do not get a chance in your current organization, you can move to a different organization and can become a manager or director or head of the department. That's quite possible. But that's the career path in large banks. You have fancy designations such as you start as an analyst, senior analyst, assistant vice president, which is just another fancy term for becoming a junior manager or just a senior analyst, and then you become a VP, which is another way to say that you are a senior expert or you are a lead expert. And then you become a senior VP. Senior VP is something like a lead analyst or a manager, and then you become a director, head of the department. In European banking system, you do not have this fancy term. Actually, in most European banks, you join as a junior analyst and become a media analyst and become a senior analyst, and that's it. And you could become a lead or a manager. And the manager at an European bank is more or less like a director at let's say some of the US banks, right? So manager at an European bank is a very big position. Actually, you can be a manager and managing, let's say, 300 people. I know such managers, but they're also, on average, you manage about 20 to 30 people. But I know people, in the US banks, you do not see that to be the case, right? I mean, don't go by the designations as such, the fancy names. The hierarchy is like this. And then finally, you want to become a chief risk officer, right? I think everyone who works in risk management, not just the modelers, but even the non-modelers, they really want to be at the top. And the topmost position for any risk management professional is to become a chief risk officer. Some people have gone on to become even CEO. I know people who are risk managers at some point in their career, and they have gone on to become CEO of large banks and mid-sized bank, NBFC or fintechs. But that is not always the case, because people who are preferred for CEO positions or managing director positions, they're mostly from front office role, people who actually do business, who are into lending or trading, asset management, that kind of work, not the risk manager, back office or middle office people. Right, but that's not always the case. I have also seen risk management professional becoming CEOs, especially the risk management professional in large banks becoming CEOs in relatively smaller banks. That's quite possible. Right, in trading and asset management firms, things are a bit different. Right, you do not have these many hierarchies. Right, you start as a junior analyst, become a senior analyst in about 3 to 5 years time. If you're not good enough, you will never become a senior analyst. You will simply, let's say, spend a couple of years, and then you will quit your job. You will move to either banks, insurance firms, consulting firms, or you will change your career. Right, that's quite. If you're good, then you will definitely become a senior analyst in very quickly, like 3, 4, 5 years time. Like most junior analysts become senior analysts in about 3, 4, 5 years time. And you do not have this intermediate levels then before being a department head, right? You directly report to the department head or probably even the chief risk officer. Trading firms, asset management firms are relatively small compared to banks. Okay, I mean, there are obviously big asset management firms like BlackRock and Vanguard, those firms, but there are most of these asset management firms, trading firms, are relatively smaller in terms of their size, like number of people working in these places. In terms of the asset value, yeah, it can be huge, but in terms of the size of the people working it's much smaller compared to large banks, and therefore you don't have these many hierarchies. You can move up and up quite not very easily, but even at a junior level, it's still quite lucrative. And yeah, and you will have access to all the highly senior people over there, right? You can directly go and talk to CROs over there. That's practically impossible in large banks, right? Even getting an appointment of a director, like the ones who reports to the CRO, is also not always easy. Especially in US banks, it's even more difficult compared to the European ones. But in trading and asset management firms, where the size of the team is relatively small, you can easily go and talk to a CRO. That's possible. In consulting firm, there are even more hierarchies for completely different reason. The reason to have hierarchies because they simply want to create more positions, and you really feel good when you get a new position, you get promoted, you feel like, okay, you're really doing well in your career. Probably, so therefore they have more number of hierarchies. Or it's you start with being an associate or analyst, and you go on to become assistant manager, and become a senior manager. Associate to senior manager, they're like 5 levels, right? But that's nothing but just becoming from junior analyst to a senior analyst, or a junior analyst to a lead analyst in a large bank. So a senior manager position at a consulting firms like the big 4 consulting firms, okay, PwC and KPMG, Deloitte, these firms, senior manager is nothing but just a lead analyst, or even just a senior analyst. It's not necessarily a managerial position, let me tell you. And if you are a manager, it's not a manager. You're not necessarily doing people management and so on. You're essentially doing a delivery work, more like senior analysts doing delivery work at large banks, right? And once you become associate director or a director, junior partner, only those positions are very managerial type positions, and then you become a partner and senior partner. But then in terms of salary and remuneration, everything, it can be very steep after the senior manager level, right? The junior roles pay peanuts, and you have little bit of, and once you become manager and senior manager, you get a decent jump. But if you become a junior partner and director, or and eventually become a partner, you get a really steep increase in your salary. Okay, so this can be like 2x, and this can be like even 4x, 5x. In fintechs, the career path can be very smooth for risk management professional, because there's simply not many professional that prefer working at fintechs, because it's a risky career. You do not know whether the fintech company will survive or not. So most risk professional prefer working at large asset management firms, consulting firms like KPMG and EY, or large banks. But if you work at fintechs, right, the career growth can be amazingly well, especially for junior folks. If they really want to grow quickly, fintech is the place to be in. Right, you can in 3-4 years times you can become a senior specialist. If you really do well and really work hard, you can even become a department head in 5 years time. I have seen people being able to do that, and that's quite possible. And there are many senior roles you can get into after becoming a risk management professional. You can become a chief product officer, chief risk officer, chief compliance officer, chief data officer, chief analytics officer. There are many senior roles within the fintech firms where people prefer ones with the risk management background. That's much more difficult in large banks, where moving from one department to the other is almost not possible after certain years of experience. I mean, initially it is much easier, but after a while it's lot more difficult. All right, so that's something I want to share. If you have questions, as always,